Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to take you through a company called Northern Arc Capital Limited. We're going to go through their recent result, understand the main important points from the con call summary. And before I get into that, right, I'll just tell you briefly what does the company does. So the company, Northern Arc Capital is registered as an NBFC, where they provide loans. So over here, their business is divided into two parts. One is direct to customer, where they lend loans directly to the individuals, from MSMEs to consumer finance to rural finance. And then they have a second part where they call it credit solutions, where majority they deal with institutions. One part is called fund management, where they handle fund. And second is placements, where they help other originators or people who give loans for them to raise from other parties. And the other part is lending. So these are the main businesses. If you look at the result perspective, which recently came out in Q4 of FY26, the revenue increased by almost 23% to 742 crores, and PAT was up by almost to 51% to 133 crores. And if you look at the FY26 whole year revenue, it was grew by around 15% to 2,690 crores, and PAT was up by almost 33% to 406 crores. So overall, if you look, especially the Q4 was much better compared to the whole year, and plus they got the operating leverage also. And if you look at their AUM, right, as I told you, they have two parts of the business. One is direct to customer lending, and second is credit solution. So overall, AUM mix around almost close to 59% is contributed by D2C, and the remaining 40% comes from credit solution. And the other good thing, number which came right for the whole year, that their overall disbursements grew by almost 39% to 9,792 crores. And if you look at their profitability numbers now, those are also looking quite good, because if you look at their net interest margin, it was up by almost 25 basis point to 9.4%. Their credit cost declined to 42 basis point to 2.8%. And their ROA improved by to 2.8%, and their ROE also improved to around 11.1%. So if you look at their profitability side, right, from net interest margin to credit costs declining, ROA and ROE improving, you can clearly see the impact on the bottom line. And if you look from the asset quality perspective, right, that also improved. The GNPA, improved further and came down to 1.2%, and NNPA is below 1%. And if you look at the exact number, it's around 0.6%. And one of the other reasons, right, that their asset quality is so good and overall things are getting so much better is, right, because the way they handle their business or they provide for the provisions is quite different. On the con call, the management clearly says that whenever any loans falls into this 90 plus day past due buckets, right, especially the unsecured loans, they do 100% provisions for that, which is not quite common, because some NBFCs might do it for only 40%, 50%, 60, 70, depending upon, their, their decision. But in terms of Northern Arc, they provide 100% provision for any 90 plus day past due for unsecured loans. So in short, obviously the credit cost increases, the profitability might decrease, but from the long-term perspective, if you see, it's much more beneficial for them, that so that they don't have to provide do more provisions in the coming days. And at the same time, if they're able to recover the loan, that also boosts the profitability. So that is one thing unique which I saw about this. And if you look in the terms of guidance perspective, the management said that they want to grow their asset under management on between around 22 to 25%. They want to improve their ROE to 3% plus, and they want to improve their return on equity also. And in terms of return on equity, they clearly said they from currently 11.1%, they want to improve it to 15 to 18% in the next 2 to 2.5 years. So, I mean, that's actually, like, if they're able to do that, they'll be able to increase their ROE by almost close to more than 50 to 60%, which in fact will be very helpful, because it automatically will boost the bottom line if the asset quality remains the same, the net interest margin keeps on improving, and there is no increase in the credit cost. And in terms of new product, if we see, so they did not speak about launching any new product, but the only one question was asked about affordable housing. So the management said that from the board they have got the approval. They can start affordable housing, but currently they are waiting, because what they want to do is, right, so they already have a product called loan against property. They want that segment to reach up to a certain level, size and scale, and after that, they will enter into affordable housing. And in terms of number of branches being increased and everything, they have not given any numbers. So if you look at it, the growth will mostly come from two factors. First of all, obviously, the overall improvement in the credit cycle, the demand is coming back. So that is the first thing. And obviously, the D2C business, which is doing quite well, especially in the MSME segment, right? They're going to push more over there. So those are the main things which are they going to grow from. And if you actually look at this company, right? This company came with an IPO in 2024, but after that, right? It was not good for any of the people who are holding these, share, because the market punished the stock. And the main reason the market punished the stock, because when the company got listed during that time, their, revenue was going around close to 45%, but the next day it went down to almost 23%, almost close to half, and market did not like it. And one thing we need to remember, right? When the sales go down, it does have an impact, because if the sales go down, automatically the profitability will also go down, and the amount of money that the company was earning before will automatically, at the rate it was earning, will automatically reduce. And that's what happened. But at the same time, with this new guidance, right, and things improving, the market has also reacted in the same way. Because if you look at the stock, right, it has almost came back to its IPO level. So, and if they're able to deliver this, what they are promising this year, and they continue for the next couple of years, right, it will be good news for their shareholders and the people who are holding this share. So, again, one thing I want you guys to remember, right, sales growth or the revenue growth matters. And when it comes down, market reacts to it. And obviously, it goes in the opposite side. When if it keeps on increasing, like for example, Northern Arc is growing at 25%. Let's say next year they grow at 30% or 35%, right? The market will react in a positive. One needs to be very careful and be aware of that, right? And if you guys like this analysis, please do hit like and subscribe to my channel. Thank you and God bless.